The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi, folks. Very frustrated. Basil Chapman here. I had a problem yesterday, and we thought it was fixed. I was going to thank Kathy from Hot Comms. She did a great job. And suddenly, I've got problems here. But I'll do the best I can. Dow's down 112. Dow's down 112 at 16,962. Now, how am I going to be able to keep this going here? The S&P, the dollar SPX, it's going to change again. Oh, this is just horrible. All right, so the S&P is down 16 at 19 something. 19, I should know this, 81. The how am I going to keep that going? Okay, it's not that there. It's not that. Right side. There's a timer going on here, and that's just frustrating the heck out of me. Okay. I'll run the numbers, and we'll see what we can do. Maybe I can fix it during the break. Your chart looks good. Camera looks good. Audio good. No, it's not good because I keep I keep losing it, and it keeps going to the notepad. So there's a blank chart. That's the way I'm seeing it. All right. So no, what am I going to do? I'm going to take something else. I'll tell you what I'll do. Give me 1 second. I'm going to copy the window, paste the window. Right? Didn't work. Nice try. Oh, my. Okay. Let's go back to this. So the S&P is down 15. The QQQ series, if this doesn't... No, I can't do that. All right. So I'm going to do something else. Let's just get this up here. I'm going to switch. I'm going to go here, and let's see if I can do this. I like to have the charts. There's no reason why I shouldn't have the charts. So let's go left side is over there, and I'm going to say recent workspace. Let me go to the open desktop. Here we go, open desktop, and we're going to go to right side, open, and there it is. Well, no, it won't. All right, got a little problem, and I'll just do the numbers. So the QQQ series, so the comp index is down 32 at 46.75. The QQQ is down 34 cents at 104.60. You've got gold up 470 at 12.60. I wanted to show these charts. I'll have to figure it out in the break. Minus 35 cents on the silver. Platinum's down 4. You've got crude oil is at 36.62. Now, it's very interesting because we've got a series of rotating aspects to the commodities. And I wanted to show where we have your ESH chart. How can you have my ESH chart when I don't have it? I'll just put this back and see what's going on. Yeah, the ESH chart, it must be stuck. Charts, please. Yeah, I don't have the charts. And now let's go. Oh, I just lost it. I needed it. All right. And bonds are up $2, almost 2.5 points at 164.22. I really need to go through this. So the break will be coming up very soon. I'll figure it out, I'm sure. And want to look at the dollar. The dollar is at this point down 10 cents at 96.96. So let me just discuss what I'm looking at here. In the Chapman wave methodology, what we've been looking at is from the weekend. I said I considered that we should have a weakness early in the week, and then we should see a rally towards later on in the week. That's the way I'm looking at it based on the technical foundation. Number one. Number two is, yesterday, the Dow extended its leg D, but the S&P made a peak D. S&P is weaker today. It's down 0.80. I do have charts, but it's not on this particular screen in the middle. I've got charts all over the show, but not right in front that you can see. So What's important is that the S&P's done 0.84, Dow's done only 0.65, and the QQQ series, if I can just find it right here, is down in percentage terms. I'm looking right across there, like 0.41. So you can see that there's a relationship here that's really important. So what I'm going to do is I'm going to go to Robert in Chicago because I can do this right on the fly. Robert, how are you?
I'm great, Basil. How are you?
I'm well, thank you. Are you still holding your Procter & Gamble?
Yeah. And actually, I want to buy more. But I want to go back to a conversation you and I had about 3 months ago, and you thought it. You thought at that. You thought at that time. I might have you on speakerphone, and I apologize for that.
That's okay.
Going back about 3 months ago, you thought that it would have a hard time getting over the 83 mark, and
yes,
and it seems like it has. And I'm very bullish to market. So I want to go long Procter. Could you talk about 83? Does that number mean anything anymore, or?
All right. So this is really important. We spoke when Procter & Gamble was quite a bit lower, and it still dropped a little bit. It went to the 75s, and then it had a fabulous rally. At this point, it's trading at 83.14. It's up 5 cents. Now, what's really important about this, let me just do a notation here that I can see. This is peak A, B, C. This is D, and it's still holding well. There are a couple of things that are going on, and I think it's really important. I really appreciate that you brought this up, and I'll tell you why. For my opening call subscribers, we have a dividend stock that has done extremely well. I think it's pulling back today, if I can just have a look to see where it is in my list. No, it's up today. So this has been holding really, so it's got capital. And remember, I spoke to you, I said, what we want is stocks that have good potential for capital gain as well as dividend. Otherwise, the dividend means nothing, because if the stock drops 8 or 9%, your 4% or 3.5% dividend is gone. So you're in the exact right area. I love what I love this aspect that you're dealing with right now. I'm just going to grab a weekly chart. The weekly chart is an A, B, C, D, E. It could be F. It could even have recycled. But what's really important, if you remember, what I was looking at was the left side. Back in April of 2015, Procter & Gamble had resistance round about the 84 level. And it's just bumping into that now. So this is my recommendation. Well, I'm hoping for that there's a break coming up. I even lost my clock. I don't know what's going on. But I'm hoping that there's a break now, and I can come back to the chart, because I'd love to show you the aspect of the V-shaped formation in relation to the weekly chart, the steadiness with which it's gone in a stair-step manner to each higher peak. Then it pulls back. Then it goes back again. So I love that particular aspect. But what I am looking for is in the monthly chart, and I'm just going to grab a monthly chart now. Let me change that to a monthly chart. In the monthly chart, the fact that it's gone more than a 50% retracement, and of course we've just started the month of March, but so far in March, the retracement has gone above the 50% level. So from the high that it made at 93.84 back in December, down to the low that it made at 65, this is a really good retracement. You do expect at some point it's going to have some kind of resistance. So we got a break. I hope that I'm able to do some work during the break. So I can you hold on?
Absolutely. Thanks, Basil.
Great. We've got Robert in Chicago. We'll be right back. Dow's down 115.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Folks, I'm going to just have a look to see. I think I resolved something. And let's see if I've been able to get what we've got here. Let me just say, Al, if you can just, I see your chart window, it's just white, but you don't see it white now. Now you see the chart itself, surely. If you can let me see it, Al, if you can go to it, I'd appreciate that. No chart. Well, you should have a chart. Oh, I see. Okay. So let's go to this right now. I'm going to go right. How can I do this? 1 second. I'm going to try it one more time with the background. But I think when I reset everything, there must have been a timer. Look, it's about to disappear. Yep, it disappears. So, Al, I'm going to do this. You'll be able to see a chart, but it's going to be a little different to normal. Camera goes right there. And now I think I'm on one chart, and I think it's the middle of the weekly chart. Let me just see if that works, because then we can go right on, and then there's no problem. I'll figure it out. No chart. Anybody see a chart? Chart, yes. Chart, no. No chart. Yes. Okay. So I think that I'm looking at one chart here, and I think it's just the weekly chart. I see part of a chart. Hey. Half a chart. Half a chart is better than no chart. Maybe not. All right. I don't know how I know what to do. I'm going to do something I've never done before. Making that smaller. Just, folks, bear with me. I'll be with you in 1 second. Okay. I'm going to go to this background right here. I'm going to put it there. I'm going to make a copy, paste. I'm going to put it over here. I can't do it. Okay, let me see if I can just copy this. Copy window, paste window. No, I keep getting the wrong thing. All right, sorry, folks. I'm doing the best I can. And I could, in fact, produce other charts. There's a timer involved here, and it is the most frustrating thing because it's just the fix is the simplest thing in the world, I know. But, there it is. Anybody see that I got a chart up? Oh, it's the camera. The camera is the one. It says timed window, timed application. If you don't mind, I'm just going to give it a timed application. Let's see if I can do anything here. Whoops. Timed application. Timed application. Wow, this is really frustrating. Okay, I hope that works. Had it for 1 second. And now what do we got? What do we got? What do we got? Yes, I think we're okay. I did it in a different way and it could disappear, which it has. Oh, frustration, frustration. All right, I'm going to go to PG. As you see the chart, you'll see it for 1 second, then it's going to disappear. I'll just keep clicking on it. Here's Procter & Gamble. It's going to a leg D. It made a round number the other day at 83. And now this is what I wanted to say. I love the action, and I can't talk like this. It just does. It's not going to work. There is a time camera. I wish I could get someone with a little technology to help me. It'll take just 2 seconds to get rid of it. There's a timer involved, and it's just give me 1 second or 2 seconds, and then it takes the chart away. So this is. I hope. I'm sorry. I'm sorry, Robert, for being frustrated and having you just sit and hold. It's got a white screen. Toughies. That's the way it goes. I'm going to just say that the Procter & Gamble monthly chart at 83.26, I'm going to make the recommendation. Well, there are two recommendations. The first is you could start a small position here. I don't think it does you that much good if it's a small position because you really want, this is a position that you want to have guts because you're thinking, hey, if this market continues higher, Procter & Gamble acting very well as a defensive stock right now, not defense like Raytheon, but defensive in the area of the sector that it's in. In this particular regard, you want something that's going to go from 83 back towards the 90s, and you're going to have a substantial amount. That's why you're adding. So it would be, it wouldn't really serve the purpose for me to say, start a little bit here, but I would like to say to you, have a little patience, because if you can get it close to between 82 and 81, even though it's a 1.5, it really needs just to digest for about 5 sessions to 7 sessions. Then I'll have much more comfort, because if it goes from your 82-ish area and it goes into the 84, 85, I think you've nailed it. You've got exactly the stock that's showing good relative strength. If, on the other hand, you get it here at 83.29 and it starts to pull back to 81, it doesn't give you much leeway. So I'm going to suggest that 83.30, only if you think it's worthwhile and you add another small position, that's a small position, and I would still say to you, wait until it comes back to 82 to 81, and then you can add a better position. But as it stands right now, my contention is that it is almost due for a little bit of a pullback, and I don't want you buying at the top of this range. I'd rather have you the comfort that you had before, re-establish that comfort by buying 2 points down, 1.5 to 2 points down, give it a 1.5 of leeway, and then you'll see what will happen in the longer term. I hope that helps you, Robert.
Okay, Basil, hold on a minute. I have another question for you. You mentioned now that it's done a 50% retracement.
Yeah, it's actually I'm doing it by eye. I'm saying it's nearly 60%, yes.
60? Okay. Now, what would be the next retracement that would concern you going on the up?
So the
up,
next
75%?
level of resistance is in the 84 to 85 area.
Okay, and does that concern you? Or what number do you have at 84, 85?
I have no concern right now.
Okay.
On the upside, my concern is on the downside in terms of time. If it breaks 80 in the next 3 weeks, if it breaks 80, it could pull back a little bit longer before it builds up enough energy to rally again. That's my only concern. Not the upside, but the downside. Oh, someone in the den said 50% retracement up. Yeah, I can see now. It's about a 50%. Yes, just over 50.
So, Basil, can you move it beyond that? You've seen stocks move beyond 50% retracements, correct?
Yes. Oh, absolutely. And I love the action right now. I just wish I had all my technical data. Maybe I'll do it here quick. I'll see it quickly here.
So what I'm asking, what would be the next retracement that would concern you? 0.75 1%.
Oh, you talk. I'm not going to do that in terms of fib or anything like that. I'm going to say the left side resistance that I'm looking at is the resistance of April of last year at 84.20, and then it is the peak of March at 85.11, and then it goes, and then it's actually, once it gets there, it's kind of open. There is resistance in the 85 to 86 area, but my thinking is if it can break out into the 84s from here, then it's established a higher base. That's really the thing I'm looking at. I'm not looking so much at the upside, Robert, because I think the upside's taking care of itself. I'm a little concerned. I will be concerned if it breaks the support between 81 and 80, if it starts to go into the 79 area. And those are the figures now, the numbers that I remember talking to you about even before. So that I'm still staying with that. Back into the 70s says, oh, be a little careful here. It'll need more time. So you wanted to break out quite quickly, which is the only reason why I'm saying you could add a small position, but it doesn't really accomplish what I think you're talking about. You're talking about a substantial position that can really garner good profits. I'm saying the only way I can do is just to nibble here. I prefer 83 to 82 is where I would add. Hope that helps you, Robert.
Thanks, Basil.
Thank you very much. Folks, we'll be back. We'll be back with Mark and Scott straight after this Basil Chapman Tiger Technicians Hour. Now we're down 95 in the Dow, down 16 in the S&P. I'll try to resolve this.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks. So we're back, and I just wanted to show you that I have the chart of Procter & Gamble right now. Let me just get rid of this right here, and I'll show you what I'm talking about. There's a lot of strength in the weekly chart at this particular point. That's the reason why I was discussing what I was discussing with the daily chart. Let me just do this right now so you can see it click. So what the daily chart is showing that it's making a peak D, and the stochastic and MACD are very good, but it just might need a little bit of a pullback, and that's the reason why I'm saying for 1.5 points, I think it's worthwhile waiting a tad. So let's go. We'll go through to that. Let's go now to Mark in Fort Collins. Mark, how are you?
Good. How are you?
Good, thank you. Let me just get this chart up. You'd like to talk about Twitter, right?
Sure.
Okay. Now, I just wanted to see if Al can give me the chart, and I can see exactly if I got it correct. All right. Yes. What would you like to know?
I'm looking at it, and I'm thinking it's going to go to a leg D in the daily, and wanted to see how quickly you think that might happen.
Okay, so folks, just in terms of disclosure for my subscribers, we have Twitter TWTR is trading at 1872, down 45 cents. We have it at $15.80, and again at 1755. I need to just double check that we weren't stopped out because I did change the stop. Second one saying, no, we're still long. And yes, I'm expecting a leg D as well. I have to tell you a couple of things. One is, out of all the high techs in the social media, this is the one that just got hammered the worst. Twitter, it went from 74 down to $13. So this is just a bounce. I have to treat it at first as a bounce within the context of a much deeper and longer downtrend. The only way that I would consider that it's changing its downtrend to an uptrend, first of all, in the daily chart, it has gone to a buy mode. I have to consider that it's a buy mode at this particular point because of the technicals, the 80% and the stochastic. MACD is still good. I did have a sense that from the 120 with the peak F top right there in the corner, that it would be pulling back. So I like what I see. Now, your question is, where do I get in? Is this a good place to get in?
I'm already in based on your newsletter, but I was looking at maybe not as in as I wanted to be. So I was thinking of maybe just buying a quick couple-week call to see if it's going to do a D.
Oh, you'd like to buy an option call?
Yeah.
Oh, okay. So that's a little different. Would you go for the March with a week to go, or would you go further out, April?
That kind of was what I was asking. Why I was asking.
Okay. So if you and I are expecting a D, it has to be within the next three sessions, maybe 5 at the maximum. I would say 3.5 sessions. But it really, that's the way it should work. Okay. So if you're going to buy a call, I would definitely go. What would you be buying? Do they have 19 calls, or do they go by 20, 15?
I was actually looking at the 1850s or the 19s.
Okay. If you can get the 1850, this is off the top of my head with my experience with options. If you can get the 1850 for, I would say 55 cents or less. What is it trading at right now?
At 88, 90.
Yeah, that's what my thinking was. It would probably be, if you have just the patience to try to get it, I'd even just put it in, jab it in and say, okay, hit me, that's all. Because we could still have one more day of weakness or another half a day after today. Just put in a nutty thing like it's trading at 18.69, so you don't want to give it, I wouldn't give it too much, 55 cents. 55 cents, and I think no matter what, you should get most of your money back if you're wrong. And if you're right, you're going to get 55 cents plus the 20.33 that it has to go to for leg D, and that takes you to the 20 strike, and you're already in the money. So that's the way I would do it, and I would definitely not get carried away. I'd have patience, see if you can get it, and if you miss it, you're just going to have to buy fewer, and you might have to pay a little bit more. But give it a chance. See if you can get it today for that kind of price.
Yeah, I was just thinking to play with it a little bit, and I was thinking, like I said, I wanted to kind of get that feel for you when you think it's going to, if it makes it leg D, how long it will take.
Well, it has to, as I say, it needs to repair the damage. I have my rule of 136. You can see what happened in the last one. 1, 2, 3, 4, 5, bam. 6 is the bar that took you to C, and then it pulls back. The best is when you go only 1 maximum 2 bars of consolidation. Third bar, you
Right.
want to be breaking out to the new recovery high. So this is a test because this is the second day, and it's unique D. So I hope that helps you.
Yeah, it does. And it looks like it's right on the 50 and the 9 EMA right now. So
Right. But it's a 120-minute chart. Let me just show it right here. That shows that there's just enough strength. Yep, we're getting a little oversold in the technicals on the stochastic and the MACD. This is the opportunity. I hope it has just one quick dip down to 1850 and you'll get your price.
You're the man. Thank you.
We'll see. Thank you so much. Let's go to Scott in Safety Harbor. Scott, how are you?
Well, you can only imagine, Basil, after my call on CX at 386. I mean,
I was watching that. Alcoa, US Steel, CX,
my profits were, I can't, you wouldn't believe it. It's just, I buy a lot, and it's really changed my life forever, and the people that follow me has changed their lives, and it's just a ridiculous profit, and I just had all the confidence in the world, as you can remember, that it was
I did.
high.
And that's fantastic. And that's just a once in a 4 or 5 or 6 year span that you get that kind of sudden unrelenting move to the upside with just mini pullbacks of 1 day or so. So you just nailed it perfectly. So you're looking now at what?
I'm looking now at Gilead. Everyone that my friends and relatives that follow me, I told them to get out of Alcoa and CX. I mean, we just.
Oh, you got the jackpot.
If you get
That's
rich
for
off
sure.
of something, and my gosh, don't push the limit. But anyway,
Right.
As far as sector rotation goes and so forth, it's just got to be the time for Gilead. There is just, it's been beaten up so badly, yet they're making millions and millions and millions every month on their Hep C. So.
So here we go. Let me just tell the folks who are listening. We're looking, folks, at Gilead Sciences. Gilead, I believe it's an Israeli company, and it's trading at $89.90, up 24 cents. And it's had a very interesting pattern. It's got the lowercase h that I'm going to draw it in right now. The lowercase h goes to the arch formation, and the arch stopped dead higher up. Now, that's really important because what it says, this is very much like, I don't think I can do it. Well, I don't want to do it to change the chart. Everything's working fine right now. But the left side low on the 2nd of February was 81.89. And then it ran to peak A, peak B, peak C, and lo and behold, bam, it stops at 91.50, makes a series of lower highs, but it creates a floor, and that floor is at 86.79. If ever there was a chance that this was going to break to the upside, it has to take that moment, actually yesterday into today. And because the Dow is down 92, the S&P is down 16, and Gilead is up 20 cents, it says that if there's some kind of a release of downside pressure, then there's a really good chance that it could break the left side high of 1992, made of the 26, and then the left side high of 91.50. Can you hold on 1 second? I'll give you a brief
I'd love to hold.
synopsis.
Thank you.
Okay, we'll be back, folks. Basil Chapman, we've got Scott in Safety Harbor, and we've got Joe in Boston coming right up.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Folks, we're back, and I'm going to go to Scott in 1 second. I just want to say for the crude oil, what leg is it in? Leg D in the crude oil, but there's a rotation, I believe, I might be wrong, that's going into one of the others in that area. So we'll see maybe if there's a bit of a pullback there. Let's go back. We want to look at Gilead. We're looking at the Gilead, and this is my suggestion. So are you in it right now, Scott?
No, I'm looking for an entry point. Here's something funny I was going to tell you about the Alcoa and the CX. I have an uncle that's a physician, and I got him in so deep in it, and when it went up, he called. This is hilarious. He called me and said, "Are you sure this is legal?" I mean, he did so well. I mean, it was uncanny how it went up so fast on a low-level stocks like that. So
well, that's great. Okay, now let's look at Gilead. Now I'm going to make a suggestion that it may be a little different to your usual trading pattern, because I know you like to go in, you try to time it, and then when you're in, that's where you put most of it. But the scaling part of it might be a little different this time, because the IBB is down quite sharply. It's down 6 at 262, and you've got Gilead holding well. The way Gilead, it's like a spring-loaded movement right now. It has the potential for that, but it mustn't drop from 89.79. It really shouldn't close under 88, because if it does that, it could just continue sideways and be very frustrating. It has to be up against this downtrend line that I've drawn from the previous peaks. And that is very important, because the moment it breaks out and it goes to 90.92 for this stock, $1.50 is nothing. So the moment it gets there, I don't think it's going to take more than a split second to try to challenge the 91.50 high of the 17th. So that you don't lose the trade, I'd get in some of it right now. 2 things. Number one.
I agree. Absolutely. I agree with you.
So number one is, if it does drop, I wouldn't add to it until it tests and then it comes back. It means you might give up a point, but I'd rather give a point up as I'm moving with the trend up than to try to catch a falling knife to the downside. So really, that's the position.
Saying, Basil, if it drops to like the 88 mark, wait, because it's more than likely going to do 87 then.
If it does that, and if it can hold here, but later in the day, I'm expecting by midweek, maybe Wednesday afternoon, early Thursday morning, we've corrected and we're starting to move higher. I hope I'm right. That's the way I'm looking at it. So I'm just going to say to you,
sign of strength and back at the 89, then pull the trigger and catch the 90, 91.
yeah. So there are two ways. One is you can hold off, see if it breaks today's high. You can start there, or you could just nibble here because it's going to give you a real sense of what it's doing as the market's doing something else. That's really what you want. So I hope I helped you there. And the 120-minute chart has improved.
I'm
But
about 2,500 shares, so I agree with you. I'm just going to take like a 250 nibble on it right now.
yeah, make it smaller, yes. Good luck. Let me know how it works out, Scott. Thank you for calling.
Thank you, Basil. Thank you.
Let's go to Joe in Boston. Joe, how are you?
Very well, Basil. How are you today?
I'm well, thank you.
Yeah, I haven't called for a while, and I've been still listening, and your call about P&G piqued my interest to call again. I'm still holding P&G. I used to talk to you about that. I had options, and then I actually converted some to a long-term position and core position for dividends. And about a year ago, I picked up some AT&T, and that's done very well, both on a capital gain and a dividend perspective. And I'm looking to add to my position, but I was just thinking what you thought about, what might be a good time. I know it's had a pretty good run recently.
So, okay, let's just talk about this. And so, Joe, congratulations. I mean, you've just really thought this through very well because, as you say, we spoke about this before. I said you want to have the option of a capital gain with your dividend stock. You don't want to have a dividend. I know people that have stocks that have they've been decimated, and yet they say, oh, it's still great. I'm getting my dividend. I'm looking at them, I'm saying, you're getting a dividend, but your capital has gone from X to minus. I mean, I don't like that. I mean, some people can live with it very nicely. I just don't like that at all. I want to see a stock that has everything intrinsically that we love to look for, and you get the bonus of the dividend. And you've just done that perfectly. Verizon and Telephone are good. And let me just post this chart. So here we go. Click, click. There's the Telephone chart trading at 38.24 up 11. So for subscribers, we still have a half position left from basically just about 34.19, I think it is, and it's trading at 38.24. So there again, we've got a nice 10% increase in the capital gain, but the dividend is there, and it's making a leg D in the 120-minute chart. It broke out in the pattern that I call the Chapman wave, cup and ladle in the weekly chart with a perfect plumb line of the left side high of the 26th of June of last year, the week of the 26th at 36.45, plummets down to 30.97 in August. And then I drew an arch formation using the peak that was made right there on the week of the 23rd of October at 34.74. It will still pull back, but then it hit 1 week early. It broke right through to D, and this pattern is the one I call the Chapman wave, left side, right side, price time match. It's also the cup and ladle formation. And it says if it breaks the previous high in C or D, it should go to at least a D, sometimes even an E, and then pull back and retest the lip. The lip is at 36.45. So this is what I'm going to recommend. It's so close at 38.24 to the all-time high. The most obvious high was the high back in April of 2013 at round number 39. I'm going to recommend that to add at this particular point for a point and a half, because it should stall in the 39 to 40 area. I'm not sure if that's really the way. It's almost the same as I was speaking to Robert about the Procter & Gamble. For a point and a half, when you're looking at building a very nice portfolio of these stocks, I think the risk is that if it turns down in the next week and a half, it really could test the 37.25 to 36.50 area. No big deal if you're holding for the intermediate to longer term, but it is a big deal if you've only got a point and a half to go before, or less than a point, before you bump into that left side resistance from 2013. So I'm going to offer you two recommendations. One is that you've had patience so far. I would not, it's the chart, the daily chart looks just fabulous. All these green candles. But obviously, these are stocks that are in a sector that's, actually, I don't want to talk about it. There was another thing I was going to talk about. The stocks that are in basically the dogs of the Dow are doing the same thing. They're fund managers are looking for two things. They're looking for stocks that are doing well and I believe are giving yield because they've got a little bit of a security there. And at the same time, they're looking for stocks that historically have been beaten down but are great companies and they show potential to rally. So this is almost in both categories because AT&T took quite a long time to go from 39 down to 31. That's 8 points. That's a good percentage decline. And now it's come back very nicely. So here's my recommendation. I think to maybe prove a point, but to also learn so that you can learn a structure that you've worked on so well to be building portfolio. I'm going to make a recommendation. It's a little unusual for me to do this. It's up at a high of 38.27. If you can hold on, I was going to make a suggestion that you nibble here, and I'll explain why. Can you hold on?
I'll hold on through the break.
Okay, so this is not part of the big position you were looking for, but it's something I want to talk about. I'll be right back.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Learn how to trade options with Swim Lessons. Brought to you by TD Ameritrade. Think or swim. Next on TFNN.
Hi, folks, we're back, and we've got Joe in Boston. Joe has got nice positions in telephone teaser symbol trading at 38.30. It's up 17 cents. So, Joe, as a learning experience, because that's what I think this is all about, the market. I mean, I'm always learning. If you listen to the hosts on TFNN, everybody says, oh, they just picked up something from someone, and it's just nice advice, etc. So I'm going to say to you, this could be a little bit of a learning experience. I would buy just a small, I'm emphasizing a small position because this is a part of a process that I want to see if it helps you in figuring out the timing, getting closer to how to time certain positions when in fact you're going up against resistance. And this is what I'm going to suggest. Start a small position at 38.32. The preference here is that if you're going to add to the position, you already want to add between 37.25 and 36.50, somewhere around there. So this is something completely separate. As an experiment, nibble here at 38.33, and let's see if it goes to 39, between 39 and 39 and 3/4, quicker than it goes to 37 to 36. And if it does that, this small position is going to educate you a great deal, because it's going to tell you what a strong stock in a sector that's in favor does when it bumps into resistance, very long-term resistance. How does it break out? How does it stall? And how does it come back? And this way you will follow it, because you'll have the stock. You know what I mean? Otherwise, you'll forget about it in 2 days. So this is just an experiment. And call me call me next Wednesday or Thursday, if you're able to, and let's look at it together. Is that something that intrigues you?
It does, yes, definitely. I mean, this is a core position for me, so I'm looking to add. And
exactly.
You know, the question is, I don't want to add it at the top and have it.
And I don't want you to add at the top, but I want you to get a sense of what happens, and I want you to get a sense of just how strong the stock is, or if it just suddenly pulls back now early on. And this is the way to do it, but just a little bit, just to give you a sense of what's going on. Hope that helps you.
It does. Thanks, Basil.
Thank you very much for calling. Joe in Boston. Okay, a couple of quick questions. I haven't got a timer here, so I'm just expecting at any moment we'll have to break, because you're going to go to your swimming lesson. First question was, VIX, call VIX 420 buyers today. Do you see year 2000 style April crash or May 2010 style S&P sell-off looming? I'm going to talk about that over the next 2 days. I'm going to talk about what I'm anticipating. I really need to see how we close today and how we are tomorrow at this time. But I've got a real sense of what I'm looking for. Let's see if that unfolds, and I'll talk about it tomorrow. Next question was, I spoke about crude oil. Crude oil is in leg D, probably going to make a peak D here, but I see a lot of buying coming in based on the stochastic at 90% and the MACD holding very well in the daily, and the weekly is starting to improve. So I think 35.50 to 34.50. I'm not sure it'll go to 34.50 just yet. I think it's going to hold very well, hold between 35.80 and 35.20. That's my thinking for this week. IWM, let's say IWM should still be in. IWM quickly. IWM is making a peak. See, I'll show a picture of it right now. There's a picture of the IWM. Now the weekly chart is improving because it's above the 9-period moving average and the 200-period moving average. I think at 107.05 down $1.84. This is peak C. There should be a D. It's another reason why I'm anticipating that later in the week we start to find some strength. The QQQ series I was asked about, the Q's making it a peak F. But this pullback from the 200-period moving average with the MACD and stochastic still very good, says that, you know what, we could be making a high-level consolidation unless the Qs break at any point they close under 103.40. I have to think twice and say, hey, maybe I'm wrong. But so far, everything's working out well. XLE, let me see, quick question on the XLE. Wow. Oh, there's the music. XLE, peak E, alternate count, maybe it's a B, same thing as crude oil. MACD and stochastic are holding well. I see at 60.38 down to, I think, the 59.50 to the 58.50 area should be good support. Hey, folks, stay tuned for everybody. I'll be back later on, and thank you for being here, and stay tuned.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN,